everyone, myself Vaibhav. In today's session of Visual JForex, we'll be starting afresh with the new set of indicator. Name is Butterworth, and as you can guess from the name, this indicator gives us a smooth outcome compared to the EMAs or SMAs, and that is why it is named as Butterworth. We have to use this indicator to find the direction. It doesn't really say much about the strength of the trend, but for finding the side, or you can say whether the underlying instrument is in bearish mode or bullish mode, you can use this indicator to that effect. So I will be giving you an idea of how you can design and develop a simple algorithm using these indicators. So let us now head to the Visual JForex board, which has been developed by the Dukascopy Bank SA. This indicator is listed amongst other indicators just below these Bollinger Bands. Last session it was about Bollinger Band. Now we have to see how we can design and develop the algorithm using this indicator. We have to define these four input parameters depending on which we will get the output value, a smooth line, and this is going to be used to find the opportune time to get involved for the new trade. So I will give you the logical parts explanation how we are going to use multiple time frames to devise a system which we think is going to bring us the profit. So this is the 4 hourly chart, and on 4 hourly chart, for any buy trade to happen, we will need this output value of the Butterworth to be on the rise. So we will be looking for the last 4 hourly candles output of the Butterworth, and we will compare it to the value 6 candle periods back, that is 24 hours back. So we are looking at the data of last 24 hours and determining whether the underlying instrument is in bearish phase or bullish phase, and we want to be trading with the trend. So whatever is the trend, we will trade accordingly. If we have the last 4 hourly candles Butterworth output higher compared to the value 24 hours back, we will be looking to buy. And if we have the Butterworth output value for last 4 hourly candle lower compared to the Butterworth output 24 hours back, we will be looking to sell it. So that's the simple part, and once those conditions are in place, we shift our focus to the 15-minute candle period. And here the requirement is also going to be similar, but the only condition is we want to get involved in the initial hours of the change in direction. So provided the 4 hourly condition is conducive for the bullish trade, we want this turnaround to happen on the lower time frame. So the underlying instrument should have entered into the correction phase, and after that correction it has found support, and now it is again starting to turn. So that will be the time to get involved for the buy trade if the 4 hourly conditions are in place, and we have these Butterworth indicators last 15-minute candles output value higher compared to the value 3 hours back. So we will have to go back 3 hours, and given the fact that we are using the 15-minute candle period, we will have to take the look back period of 12. So that will get us the output value 3 hours back, and it should be on the higher side for the buy trade. And again, from that point in time, we go back 1 hour more, and we compare that output. So the value 3 hours back should be lower compared to the Butterworth output 4 hours back. So that is going to give us the idea that in last few hours the turnaround has happened, and these are the initial hours. So we will have the higher probability of ending the trade in profit. And once these conditions are in place, we shift to the price action. And here also we will need some correction to have happened, and by correction I mean the 15-minute candles should have closed lower, and after that the reversal should start to take place. So whenever that happens, after a correction, the price action moves higher, it starts to rise again. That is the point in time we will be getting involved. So the last 15-minute candle should close lower, but the penultimate 15-minute candle should have closed lower, and after the last 15-minute candle has closed higher, we will be initiating the trade, and we can use whatever is the volatility in last few hours as our determining yardstick for the stop loss and take profit level. So this is the logic, and for sell trade we will have to invert the requirements. For sell trade we will need the 4 hourly output for the Butterworth to be on decline. So last 4 hourly candle output value for the Butterworth indicator should be lower compared to the output 6 candles of 4 hours each, that is 24 hours. And if 4 hourly output conditions are in place, we shift our attention to the lower time frame. Suppose here we are just assuming that 4 hourly conditions are in place. We will be looking to initiate the trade as and when the turnaround happens on the 15-minute candle frame. We have to look for these turnaround. The output value for the Butterworth should start to decline. So the conditions are going to be similar, but just in a inverted fashion. We will need the output of the last 15-minute candle period of the Butterworth to be lower compared to the output 3 hours back, and the output 3 hours back should be higher compared to the whatever value, whatever output was 4 hours back for the Butterworth indicator. So sell trade will happen in the initial hours of this turnaround, and the price action condition is also going to be similar. We will need the last 15-minute candle to close lower compared to the Butterworth output of the 15 minutes, but the penultimate candle should have closed higher. And as you can observe here, that condition is not being fulfilled. So in such circumstances, no trade will be initiated, and only if we have similar kind of formation, only then the trade will be initiated. In such kind of circumstances where we have some sort of correction, and after that correction the price action starts to dip again. So this is going to be the logic for our execution of the trade, and it's quite simple. Now we get back to the Visual JForex board, where first thing we will need to do is get the instrument subscription done. And for that we are going to need logical blocks, 3 of these. On candle will be our start point. At my place here in Jaipur in India, it's raining, so because of that you are getting some background noise. Default instrument should match the candle instrument, and candle instrument will need to match the instrument of choice, which is going to be Euro USD. Here it is. Okay. And position amount we will define at 0. First block of this Butterworth indicator I will use the 4 hourly candle period, and shift value is going to be 1. We are going to use this default setup of 34 candle periods being used to calculate the output for the Butterworth. So last 34 candles of 4 hours each have been used to plot the curve, plot the indicator. Now we are going to need couple of more of these. We are going to need 4 in total. First one will be of 4 hourly time frame, and remaining 3 will be of 15 minutes each. Shift value, this will be 1. Then we have to retrieve the data 3 hours back, and since these are 15 minutes each, we will need to use 12 as the loopback period, and 16 here, as we are going to need the value 4 hours back. Okay, and after this we will be taking the help of historical candle, get historical candle, to look at the price volatility. Info, this will be of 15 minutes. And this will have a loopback period of 2, 1 and 2, last 15 minutes, and the penultimate one. Okay, and after this we will also be taking the help of 10-second candles to define the exact entry point. So for that we are going to need 2 more of these get historical candle blocks. Ten seconds. and shift value will be 1. This block also needs to be changed to 10 seconds, and shift is again going to be changed to 2. Okay, so we will be comparing the output value of candle 27 and candle 28 to the closing value of candle 25 whenever we will be placing the order. So this is the bare bone structure. These are the necessary blocks to retrieve the data and define the conditions regarding this Butterworth indicator along with the price action. And as we are running short on time, we will stop for the day here. I hope you have been able to understand this logical part and the execution part to the extent we have been able to complete in today's session. It's fairly simple to understand, and also it will be equally simple to execute. We have 2 more sessions to go before our algorithm will be ready to run. So thank you all for joining in. To access the data related to the further market developments, you can check out our Dukascopy Analytics page to start trading. You can access the JForex platform, and we are also available on the Facebook. You can join our page. See you next time. Till then, goodbye.